Hi guys, welcome to another video. In this journal, my first one's journal promotion. I think this is the first video I'm sharing my trades, and then I started trading the other day on Tuesday. Yeah, so far I've had 3 setups, and then with over 5 trades. Yeah, 5 trades. So I'm going to be going over it and then be showing you the confluences and then showing you the charts and then showing you how it went, and then talk about how the whole trade was, like the whole psychology was. So we start with GBP. It was the first trade I took, yeah, for the year. Also, it was the first trade for the year. So the time was around 10:50 a.m. my time. Yeah, entry was around 13500, and it was a short position. Yeah, 1.39 lots. Yeah, I think that was like risking 0.5% of the account. Yeah, but then it ended up in losses, and then I lost over 0.435% of the account. Yeah. Because it was an aggressive entry. If you remember in my trading plan, I said aggressive entries will be having 0.5% risk. Yeah, so it was a shift in market structure, and then the confluence was shift in market structure RSI. Yeah, I did not wait for the candlestick confirmation. Yeah, and then because of that, then it was an aggressive entry. So before the trade, I was pretty calm and then confident, and I risked just 0.5%. So I think due to the fact that I risked 0.5%, I wasn't worried at all. So during the trade, I was also confident because I risked a little, yeah, and the trade had already started going my way. So and then after the trade, I wasn't disappointed or anything. I just had a few things to learn from. So I'll be showing us the charts, and then why I'll be talking about how it went and then how everything ended. So yeah, this is the first setup for trade 1. Yeah, so let me see, is it working? Let's load. Yep, I think now the highlighter is working. Good. So if you check here, this shifting market structure, we had this whole shifting market structure, had this push to the upside, push to the upside, down, and then failed to break above, and then we came and then broke to the downside. So this here is our neckline. Yeah, it's our neckline. So if you know the shifting market structure, anytime there's a shifting market structure, you expect a retest of the neckline before a complete push to the downside. So sorry, my drawing is ugly, but you just have to manage it like that. So once I saw it like this, I already placed my orders here, and then this whole area was around the golden ratio side. Yep, it was around the 0.618, but then before the 0.764, that's where I normally put my stop loss, but then in this case my stop loss was above structure here. So one thing I failed to take note of was that we had this whole push from the downside, and then we came down, yeah, but then we broke it to the upside. So this here too is another like shifting market structure. Yeah, if you look at it, maybe it's another shifting market structure, and then this whole thing is, it was like moving bullish. Yeah, because we failed to break to the downside, and then we broke to the upside, and then if you check, the momentum was already shifting. Yeah, we had more bullish candles than bearish candles. So I entered the trade around here, and then let's check the next one. The next one. Okay, this is setup 2. Setup 2. So we had this whole, after that we had this whole push to the upside and then down, and then we continued the uptrend here. I think one thing I failed to notice was that this already shifted. We already shifted. This was now, once there's something like this place is just going to be a reaction point. Yeah, it's not going to like take over, but it's just going to be a reaction point. So that was what I failed to factor in, and then it went my way for a while, and then like we had this little push to the upside. So that's it. And then I had the opportunity to break even, but then I did not break even anymore. I was a little ambitious with it, so I don't know. Yep. And then that's it's for the first setup. The second trade I took was NZD USD, and that was like today. Yeah, the second trade was today. I think trade 2, 3, and 4 were from the same setup. Yeah, they're the same setup. I mean, yeah, they were the same setup. The confidence was stochastic RSI. Just got to the overbought zone and then a doji candle form. Normally, NZD-USD and AUD-USD, I trade both of them frequently. So most times when you see a doji candlestick, a very nice doji candlestick with like a very big body, yeah, it tends to turn bearish, or it tends to go the opposite direction. It tends to like reverse from there once the RSI or stochastic aligns with it. So I don't normally trade retracements, but then this was a retracement, and then one thing I hate about retracements is that we know price is going to go the other way, but then we don't know at which point. So I normally don't trade retracements. I just go with the trend by waiting for the retracements and then entering on the next impulsive move. But then I traded this retracement, so I rushed into the trade here because I think I was on screen from morning till I entered this trade around what time was the time? Around 2 p.m. Yes, 2 p.m. So from morning around 7, I was in front of my screen, so I was already getting impatient and all. So I entered the trade at this point, and then I think there was a USD news at that point. So immediately I entered. After some time, it started going my way, but then it eventually went sideways. So I didn't okay. So before the trade, I rushed into the trade. I didn't even chill to run position size calculation. Yes, I did not run. I think it had overall 10 pips. So I knew 10 pips. If I was going to use any lot size less than 9, 10 pips was going to be around, I'll be risking around 1% of the account. So I acted based on instincts, and then during the trade I was basically worried. Yeah, because and then I wanted the market to do what I wanted or expected, and then I moved my stop loss wider because of how everything was turning out. And then after the trade, I was actually angry that the trade didn't go as expected. So before I show the charts on this one, I really want to talk about trade. I really want to talk about trade 3 and 4. So trade 3 and 4. Trade 3 and 4, yeah. Trade 3 and 4 were just additions. Like I broke the whole position into bits into 3. Yeah, the second one was a 2.01 lot size, and the third one was a 2.51 lot size. Yeah, I think cumulative all of them I lost around 1.08% of the account. Yeah. So the second one I just added once the doji candle formed, and then the next candle started bullish. So I was adding positions so that once it turns bearish, I'll get more money from the trade. So It's like stacking it up, but then I really did not. My confidence wasn't right, so the stacking was not wise. Yes, so it was a very low probability trade, and then I was treating it like a high probability trade. So I ended up moving my stop loss so that it will not hit, because I was expecting price to reverse, but then it actually didn't reverse, so I had to like cut my losses. So we're going to the charts. Charts, set up 2, yes, okay, so set up 2, yeah, so we had this whole consolidation here, so consolidation here, yeah, we had this whole consolidation, and then push to upside. So okay, this was the outcome. Let me show you, look for the stop 2, yeah. So this was the doji candle. This was the doji candlestick. Yeah. If you, I think I was telling you that I was saying, most times when this doji candlestick forms, price goes to the next area. Let's say here, before it goes any other direction it wants to go. You can see an example here. Here, this was yesterday, but I didn't trade it. Yeah. And then you can see something like this. So it's a very low probability trade, but then I decided to gamble it. So once I saw this, and then the RSI was just going to the stochastic was just going to the oversold side, and then the RSI was already oversold. Overbought side. So I was expecting sales to start kicking in. So so after I entered the trade, I was stacked the second one around here, third one around here, and then I moved my stop loss. I think the last stop loss I dropped was around here. Yeah, so you can see it was pretty wide. And then the first trade I moved the stop loss to this place, but then the second trade I think the stop loss was still where it was. So let's check out the outcome. As you can see, normals got taken out. This was the point where the USD news came out, and then the trade started going my way for a bit, and then boom, took us out. So that was it. Overall, I was actually angry about this trade, because normally it's not my setup, and then I went to go and trade it. Anyhow, let's go to the third setup. So the third setup was trade number 5, and then this was a GBP USD trade. Yeah, time opened this trade around 3 p.m. Yeah, and it was a short position, lots 3.16. Yep, around 1.33375. And then the profits, first profitable trade since it started. It was partial, so I took partials because I wanted to cover up the money. It was around 98k, so I wanted to cover it up so that it would reach 99k. Yeah. So the confluence was shifting market structure, RSI stochastic, and it was an aggressive entry. By risk. It was pretty sure. Yeah, like it was pretty sure. And then since it was wide, and then I was trying to like cover up the money I lost, so I risked 1% of account on it. Yeah. So so before the trade, I identified the neckline of the shifting market structure, and then set an order there. And then price during the trade, price kept going choppy around, um, my time of entry until when FOMC minutes started. Yeah, and then it went bearish, and then the trade went bearish. I almost closed the trade before then. I took partials as price reached a potential area of reaction. A potential reaction area. Let me change that. Potential reaction area. Well, after the trade, I was quite happy about it because again it reminded me that I just needed to follow my trading plan and everything will be fine. So I'll be going to the charts to check the trader. So I've set up tree. So this is setup tree. Yeah. So we had this. I think almost all the trade pairs I trade had this stuff yesterday. Push down, failed to break up, and then massive break. And then we had this whole consolidation all day, but then finally price got here. Yeah. Once price got there, I was ready to attack. So I set order here. Yeah. And then waited. So we're going to check out. What is it? So as you can see, price went up a bit and then rejected. We came down, but then let me reduce the size of this stuff. We came down and then we went up, and then it was just confusing. But then I think on the 15 minutes structure was not really broken, and then on the 1 minute, on the 1 hour, it was just wicked. So I did not see a candle close above, so I did not want to close the position. So I left it, and then around 8 o'clock I started seeing price going down, and then once price was around here, I took partials, yeah, just to cover up. Yeah. So that's that about the trades I took. So we'll be talking about I'll be showing some changes to my trading journal. So this is the new journal, and I discovered some things with Excel, like the whole freezing of the top, where I can see whatever's at the top and then down will be scrolling. So I added mantras, things I tell myself every morning before I start trading, like you can be wrong and it's okay, just manage your risk and then learn from your mistake and wait for the next opportunity. Then the second one is what separates best traders. It's not what they do or when they do it, but rather how they think about what they do and how they are thinking when doing it. And trading is mostly about thoughts. I know most of us feel it's all about knowing market structure and then knowing when to buy or when to sell, but it's really psychological, most part of it, because I think for someone like me, what I'm battling with now is just the psychological aspect, that's all. Yeah, because that's what makes you to take on premature trades or exit potential trades. Yeah, and then cultivate a what's next attitude. If a certain pattern is formed in the market and all goes against what you planned, what's next? Like, okay, let's say we want to trade, let's say we want to go bullish, yeah, and then instead of going bullish, the market turns bearish. Definitely that's like a shift in market structure. So what next? Wait for the price to retest the neckline, then you enter. So like it's the what next attitude. Instead of always pressuring on the entries, just wait for the what next. And then the last one here is a winning attitude. Is a positive expectation of your efforts with an acceptance that whatever results you get are the perfect reflection of your level of development and what you need to learn to be better. So this is from the book Trading in the Zone. Yeah, Trading in the Zone. It's a book about psychology. I've forgotten who wrote it, but it's really helped in my psychology. I'm still reading it though. So this is like a winning attitude. Is a definition of a winning attitude. So and then I added lessons learned. So like from the GBP USD trade, it was a loss, and then I got minus 0.43 on the account. And then I think what I learned that I should always try to pay attention to the most research structure, because the most research structure showed the shift, but then I neglected it. And in cases where they are conflicting, I should move my stop loss to break even when I have substantial profits. I had the opportunity to move my stop loss yesterday to break even, but then I did not. Yeah, because I was expecting, there's this whole expectation we always have from the market, and then it's not right. We should be acting on what the market is showing us, not what we expect the market to do. Yeah, and be exiting from the next place price might react from, and once price reacts from a confluence like a neckline on the same time frame as your entry, exit the trade or move SL to break even. That's why I said inside it's break even. Then NZD USD to see loss. Yeah, and then this was it to the trade. I said never trade with your instincts, trade the facts. Okay, let the facts align first, and always trade your plan. If a trade doesn't meet the criteria, fine, on to the next one, and there will always be a ton of opportunities, so you don't waste money on the less quality ones. Yes, then most times we are pressured, or we are impatient that, okay, what if we don't get any trade? Honestly, I think in a week you can get setups every day, and you never run out of setups. So I think we need to keep telling ourselves that every time. And then the last one is on the GBP USD, which was a first profitable trade. Yeah, always allow trades. I think what I always allow trades to run for at least 1 hour before taking profits or partials. I took partials prematurely because I don't know, it was that whole excitement, and then I really didn't want to lose the money because I already started getting there. And then it was FOMC, it was high impact news. Sometimes high impact news are very, very bitchy. They can go down after sometimes, then they skyrocket to the other side. So I think those are the new things to the whole. And then I added some tabs on the daily report, and then I restructured them very well. Yeah, and then the weekly report, I haven't closed it, so I think the weekly report will be seen next week on Friday. On Friday I'll do the next weekly report. Yep, and I think this was the time. I think the time is already late now. Yeah, it's 12 o'clock my time, so it's already Thursday. I promised I'll drop the video on Wednesday, but my journaling went in late in the night. I closed the last trade late, so I think that's about this video. Okay, no, I would like to show the statement from Metatrader. So as you can see, I had some orders that were cancelled. These were like trades that I was just taking out of instinct, out of impatience. Yeah, and then I don't want it to get to me, but then this trade here got to me. So anyhow, and then I still have a trade that is running $141. This is from the partials I took. Yeah, so that's that. This is what my graph looks like. Anyhow, let's see how this week will end. I think for now, everyone, you guys should stay safe, and thanks for watching this video. See you next time. See you on Friday.